Peter, oil goes up for 5 minutes, and suddenly everyone on finance Twitter acts like they have survived the apocalypse. Is this still just an energy scare?
Not really, Stewie. That is the point. This stopped being just an oil spike story. Now the market is looking at energy security, slower growth, defensive credit, supply chain rewiring, and stress in less liquid parts of finance.
So we have upgraded from bad headline to whom? What else breaks if this keeps going?
Exactly. And once governments start talking about reserve releases, emergency tools, rationing plans, and new pipeline routes, that tells you this is being treated like something more structural, not just temporary panic.
Ah, yes. Nothing says everything is fine, like governments quietly preparing for people to use less air conditioning.
Right, and that matters because once energy conservation becomes policy, the story shifts. It is not just inflation anymore. The market starts worrying about demand destruction, weaker activity, and slower growth.
I assume the pressure shows up first, where countries are heavily dependent on imports and cannot just throw money at the problem forever.
Yep, Asia is a big watch area there. Then on top of that, credit starts getting more defensive. Investors move away from junkier stuff and lean more toward treasuries, investment-grade debt, and cash buffers.
So the market is basically saying lovely chaos. I would now prefer higher quality and fewer surprises.
Pretty much. And private credit is another thing people are watching closely now, because illiquid assets always look calm until too many people want their money back at once.
Amazing. So the real lesson is this is not one clean market story. It is energy stress, growth risk, credit caution, and liquidity pressure all trying to sit in your portfolio at the same time.
That is exactly it. Follow for more breakdowns like this and join the Discord if you want the full daily framework behind these moves, not just the surface-level headlines after everyone panics.